Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. Just getting pricing information about the Apple iPhone 15. Apple shares are selling off. Apple raising the price of the iPhone 15 Pro Max by $100 to $11.99. Apple shares, they are down now by 2.4%. We are looking at a slide in tech companies. Case in point, Oracle. That stock plunging after earnings, down now by 15%. We've got the S&P down 17. Drop right now of 0.4%. The Dow up 60. That is a gain of 0.2%. NASDAQ lower by 123 points, down 0.9%. Apple again lower by 2.5%. 10-year yield right now 4.27%. We have got the 2-year yielding 5.00%. Spot gold is at $19.12 the ounce. Sam West Texas Intermediate crude up 1.9%, $89.93 a barrel. Tech executives will be meeting tomorrow with members of Congress. They'll be talking about artificial intelligence. Moments ago, Virginia Senator Mark Warner addressed the talks and the AI issue right here on Sound On.
This is an extraordinarily complicated issue. I do think one of the things, and the good news is it's all bipartisan so far, is that there is a real sense that what we cannot do is simply what we did with social media, which was basically to say to the tech community, you guys go figure this out, and we'll try to come in and put rules in after the fact.
And you can hear more of the conversation on the Sound On podcast. You can download it wherever you get your podcasts. Again, Apple announcing pricing for the iPhone 15. Apple shares down now by 2.1%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
You're listening to Bloomberg Sound On with Joe Matthew and Keely Lyons on Bloomberg Radio.
With no shortage of issues to talk about this day, the U.S. House returns to Washington. We heard earlier from Speaker McCarthy, and an impeachment inquiry is being launched now into Joe Biden, which kind of changes the dynamic, Kaylee Lyons, of the conversation we were having about government shutdown and a lot of the other issues that are facing lawmakers right now, though they could be intertwined in a way because some members of the Freedom Caucus were demanding, well, even Marjorie Taylor Greene, no longer in that group, demanding an impeachment for them to sign off on a continuing resolution to keep the government open. It looks like that's happening.
So many different pieces of the puzzle. But yes, Speaker McCarthy today is saying this should go ahead. Now, eventually it's going to come down to a matter of whether or not there's sufficient evidence, right? But this is the inquiry process. And at least in part, you certainly would think it was intended to placate certain members of his party that he needs to be able to bring in line to get a continuing resolution passed or get spending bills passed and avoid the government shutting down. He says he has a plan, and impeachment maybe plays a role in that.
To avoid a shutdown.
Yeah.
Yeah, it's something else. We thought maybe it would be floated at a meeting on Wednesday. He came out with it, full-throated announcement at 11 o'clock at the podium. First day back. Welcome back to reality, everybody. Just an opportunity to start here with our next guest. Asa Hutchinson is back, Republican presidential candidate, of course, former governor of Arkansas. It's great to see you, Governor. Thank you for coming back to talk to us. You're in a race to run against Joe Biden to be the next president of the United States. Does this muddy the waters? Does this help the Republican cause to launch an impeachment inquiry without a vote?
Well, it all depends on where it goes and what the foundation and the facts are. But, in the history of impeachments has not gone well in terms of the Senate having any interest in it, of convicting a president. And here, our focus is the election. Joe Biden is wrong on his policies, energy policy. His decisions is hurting America and our growth. His spending policy, the Bidenomics. I mean, these are the issues that I get asked about. Nobody's come up to me and talking about the Trump legal cases. Nobody's coming up to me and, a few of them do talk about, from the Republican standpoint, the Biden's and Hunter's and his legal difficulties. Right. But we got to get to the facts in the long term. Let's see where those facts take us.
So when we're thinking about the pursuing of yet another impeachment against the U.S. president, potentially a precedent being set here, given former President Trump in the prior administration was also impeached on multiple occasions, then the prospect of the government shutting down broadly for the Republican Party, what does this signal about its health? and its ability going into 2024 to message the right things to the American people?
Well, it's a challenging and unpredictable political environment. You overlay what you just said with 4 indictments against former President Trump. And Kevin McCarthy's in a difficult position, as everyone knows, and so you give him a little latitude. He's trying to avoid a shutdown. He's trying to get the appropriation bills, the budget bills through. Now, you know, impeachment is not something that constitutionally should be bargained with. And I believe you ought to get the facts. I don't like labeling it as an impeachment inquiry. It ought to be a factual inquiry. The public needs to have confidence that the former Vice President Biden and President Biden was not receiving benefit from foreign governments. That's something that ought to be cleared up. And President Biden has been somewhat mum on that topic, so he's not clearing it up. And so the facts ought to be out there, but it ought to be a preliminary inquiry. Impeachment's not something that ought to be used in the normal course of affairs in Congress.
So you support the probe or the inquiry as a matter of principle?
I do.
We don't want to spend the whole interview with you on this, by the way. We like to talk policy at Bloomberg. Let's dare to dream about policy for a moment, Governor, because I think someone like yourself just indicated you'd like to make this race about the economy. And we talk about this all day long around here as we prepare for what could be another Federal Reserve interest rate hike, the next meeting this week. The market doesn't seem to know what to do about that. I wonder your thoughts on the Fed and whether you would keep Jay Powell on the job as chairman.
Well, of course, he has a term, but I would like to see a new leader into the Fed.
Yep.
And if I can do that as president, and I can, I would want to do that.
You'd fire him?
I would fire him. And the reason is that he has raised interest rates at the wrong time. I think it's been more aggressive than what needed to be. He probably started too late on it. And it's really hurting our families. And I think you also could had forestalled and been clear that we're going to stop doing these rate increases. I think that would be the right signal for American businesses and our families that are worrying about their credit card debt, new families trying to get into a new home. And you know, I talked yesterday in Savannah, Georgia, to a young mom who I said, "What's the big issue to you?" And she says, "I just want to raise my kids in a safe environment and where we can afford to buy milk at the store." And that's what's on the Americans' minds. And so it starts with controlling spending. You have to worry about the supply chain. The UAW strike that's threatened, that's coming up, is not going to be helping the economic situation. And so as president, I would call in the Fed. I would believe that the president can communicate and express his opinion as to what should be done, just like we do in a whole host of other issues.
So in terms of what the Fed should be doing, do you think the dual mandate should still be a dual mandate, that they have to equally weigh full employment in the U.S. economy and inflation, or should one take greater focus?
Well, I think that inflation should be, the controlling factor for them. The unemployment, that's what the President of the United States worries about. That's what Congress worries about. As governor, I looked at that unemployment rate every week, every month that it was released, and we acted on it, and we created jobs, 100,000 jobs while I was governor. And so, no, I don't believe that that should be in the decision-making process of the Federal Reserve. Control inflation, watch the monetary supply that's out there, and that should be the focus.
You mentioned the UAW. We could be looking at a massive auto strike in just 2 days. I wonder how you would handle this if you were the president, if you would get involved. This White House so far has not. The union has not indicated that it would like any help with mediation. But this is an emboldened time for organized labor after the deal we saw with UPS, now a request for a 46% wage increase, a 32-hour work week. Should the President of the United States have a say in this?
The President has to always worry about the economy, about the broader national security and production capability. And so, but it also should be reserved until absolutely necessary. These are negotiations between a union and the employer, and they need to try to resolve it. The Federal Labor Relations Law makes it clear that if they can't resolve that, you've got choices. Employees, the unions can strike, and employers can replace. And that's the tension, that's a balance that we've had. But if it gets to a particular point in time where the president can be useful in resolving that conflict, he ought to insert himself. But the time is not right for that, and that should be reserved.
So we are looking at a deadline in 2 days for that contract expiring. You, though, sir, are looking at a different kind of deadline a few weeks out. The second primary debate, September 27th. You need 3% in the polls to get there. I believe to this point you have not yet qualified. If you don't do so, would you follow the lead of, say, Francis Suarez and leave the race?
Well, I'm not going to set, timelines and specific criteria for it. But whenever you look at the polls, there's two criteria for being on the debate. One is 3% of the polls. We have made one poll nationally at 3%, and so we need one more, or some early state polls. And so we're optimistic that we're going to get there. And then secondly, our donor base, and we're going to make that. And so I plan on being at that debate. Nothing would mean more to me than to be at the Reagan Library as somebody who was appointed by Ronald Reagan as the youngest U.S. attorney in the nation years ago. And so I expect to be there. We got a little work to do to get there. And so if anybody calls you in a poll, please answer Asa Hutchinson.
There you have it. Governor, it's nice of you to stop by and see us again in Washington, D.C. Whether you make that stage or not, let's stay in touch. Asa Hutchinson, the former governor of Arkansas, of course, Republican presidential candidate, with us here, a conversation you will only hear on Bloomberg Radio. Let's get you up to date now on world and national news with Nancy Lyons in the Bloomberg 99.1 newsroom in Washington. Hi, Nancy.
Thanks, Joe. House Speaker Kevin McCarthy is calling for an impeachment inquiry into President Biden. He says it's the next logical step in their investigation into the president and his son Hunter's business dealings.
House Republicans have uncovered serious and credible allegations into President Biden's conduct. Taken together, these allegations paint a picture of a culture of corruption.
McCarthy is launching the impeachment probe without taking a House vote, which is a reversal of his previous statements. Conservative members pushing for the inquiry may have moved to oust McCarthy as Speaker if they were denied. Congressman Matt Gaetz is still looking to remove McCarthy as Speaker, as he explained today on the House floor.
I rise today to serve notice. Mr. Speaker, you are out of compliance with the agreement that allowed you to assume this role. The path forward for the House of Representatives is to either bring you into immediate total compliance or remove you pursuant to a motion to vacate the chair.
Congressman Matt Gaetz is especially upset Speaker McCarthy has failed to subpoena Hunter Biden. A major humanitarian disaster is unfolding in eastern Libya, where flooding from a rainstorm has left about 2,300 people dead, most in one city alone, Derna. Bloomberg's Tarek El Tabwali is following this from our bureau in Cairo.
The video clips that are being posted online essentially looks like a city underwater. I mean, one of the officials in the town was saying that the water level has risen to about the 4th or 5th floor of some buildings, which is making rescue, if possible, all the more difficult.
Global news 24 hours a day, powered by more than 2,700 journalists and analysts.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. Apple shares now down 1.9%. Apple is rolling out its latest iPhones at an event in Cupertino, banking on new materials, camera upgrades, and improved performance to coax back consumers in a slumping smartphone market. The company introduced 4 new models, keeping pace with the past few generations: the iPhone 15, 15 Plus, 15 Pro, and 15 Pro Max. Like last year, the entry-level models start at $799. The Pro version will remain $999, but the Pro Max will now start at $1199. That is up $100 from last year's version. Apple shares again trading lower today by 1.9%. A slide in tech companies dragging down the stock market today. Case in point, Oracle after earnings, down now by 14.1%. We've got the S&P down 18. That is a drop of 0.4%. The Dow holding on to a 50-point gain right now, up by about 0.1%. The Nasdaq Composite Index down 119 points, a drop there of 0.9%. 10-year yield 4.28%, with a 2-year right now 5.00%. Spot gold at $19.13 the ounce. West Texas Intermediate crude up 1.9%, $88.94 a barrel. This week, the government issues 3 inflation reports, starting with tomorrow's Consumer Price Index. And with more, here's Bloomberg's Vinny Del Giudice.
The CPI data will cover August. Bloomberg Economics says we could see the longest stretch of subdued readings in the core data, ex-food and energy, in 2 years. Outside of higher August energy costs, forecasters anticipate tame readings in most of the retail sectors. The Labor Department also issues the Producer Price Index Thursday and the Import Price Index Friday. Vinny Del Giudice, Bloomberg Radio.
BP CEO Bernard Looney will be resigning over past relationships with colleagues. This according to the Financial Times, citing 2 people it did not name. BP shares, the ADR is up by 0.7%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
You're listening to Bloomberg Sound On with Joe Matthew and Keely Lines on Bloomberg Radio.
Any day Gary Gensler is testifying on Capitol Hill is just not a great day for Gary Gensler. He was back up there again today, and Kaylee Lines went up to meet him. This is like it's a recurring thing. If you go up to the Hill, Senate Banking Committee, Gary Gensler, and you know exactly how the committee is going to split when it comes to crypto. We did this all over again today.
Yeah, arguably he has it a little worse in the House Financial Services Committee, which he will face in a couple weeks toward the end of September. But as you are kind of alluding to, Joe, it's a very partisan thing. By and large, Democrats are supportive of Gary Gensler and what he's done at the SEC. In fact, in some instances, they would like to see him do even more. Republicans, though, think he has overstepped in a really, really big way. Senator Bill Hagerty today was suggesting that he is saying he has authority given to him in the Dodd-Frank Act that he doesn't actually have.
Yeah, J.D. Vance had some things to say that were generating headlines. Everybody's got it out, I guess, for Gary Gensler here. Talking about issues in the crypto world, and I don't know, it's not just crypto, it's banking, it's everything, he says, that seems to split on partisan lines for the most part.
By and large, crypto one, climate disclosure rules another, private equity and hedge fund rules. You can kind of pick your poison in this regard. But crypto, of course, as the host of Bloomberg Crypto, which is airing on Thursday this week, was one particular area of focus for me. And frankly, we heard him say kind of how he's characterized crypto before.
If they were to live up to the investor protection built into their current laws, it would help investors. But right now, unfortunately, there's significant non-compliance, and it's a field which is rife with fraud, abuse, and misconduct.
Let's bring in Nathan Dean. That's the other thing that happens when Gary Gensler goes to Capitol Hill. Of course, Washington senior analyst at Bloomberg Intelligence. Is this more of the same for you? Like, what actually gets BI's attention where you start running odds and you say we've got news here?
So we were actually kind of pleased that they spent more time on climate change today rather than crypto, because we think that's going to be one of the next big proposals coming out, is this disclosure proposal. And the thing that everybody's concerned about is what is known as Scope 3. This is a company, all publicly traded filers will have to disclose their emissions But if you include scope 3, you also have to do this for your own supply chains. And if you're like Motorola or a big industrial company, that's a lot of suppliers. And so this proposal is getting a lot of controversy from both Democrats and Republicans. Republicans obviously want this scaled down. We think there's going to be a lawsuit after this challenging the rule. But then you have progressives like Elizabeth Warren who will say, look, you better include scope 3. And if you don't, we're going to be mad. So I think the chairman's a rock at a hard place. What we actually took from today's hearing, though, is we actually think scope 3 is coming out. We think the chairman is going to try and make this more of a reasonable rule. He said we're going to try and find a, quote, appropriate path forward. So I think that's going to be what they do if they finalize it next month.
Yeah, I mean, to your point on the divisions, even within Democrats, he said that appropriate path forward, I believe, in response to a question from Democratic Senator John Tester, who, of course, is from a state in which he's concerned with small farmers and how emissions disclosures may impact them. He's gotten a lot of flack, though, Gary Gensler, for other rulemakings, like equity market structure proposals. Of course, we had the private equity hedge fund rules out earlier this summer. Do you think we're as likely to see any tweaks on those like we may see on scope 3?
I think so. I mean, Chairman Gensler came out of the gate running. And look, the running joke for the first 2 years was if we're looking into it, we're working into it. They're looking into everything over at the SEC right now. But now they actually have to start putting out these proposals. And the challenge they have is that any proposal they put out, the industry most likely will sue. The EPA versus West Virginia case proved that the SEC has a higher standard than it needs to meet, and there's going to be a lawsuit. So Chairman Gensler has this decision: do I scale it back to try and get this done so that the courts could potentially rule in our favor, or I do this to get progressives on my side? So when it comes to equity market structure, there was a lot of discussion today about they only gave them 90 days for 4 proposals. Senator Tim Scott said 1,200 questions. How can anybody who's a small business do that? I don't think it's going to change the SEC's view. I think they're still going to move forward because we've got an election next year. And if the SEC doesn't do this and they delay it and President Biden loses re-election, then they're not going to get anything done.
Wow. I have to ask you about safe banking because you're the only person I trust on this. The MJ, the marijuana ETF, was up like 16%, 14% yesterday. Couldn't find a real trace of news other than this buzz right now that the Safe Banking Act is going to come back up again. Sherrod Brown says he's going to get to it in a minute. Chuck Schumer says, give us a second, we're about to do this. You've been tamping down expectations over this as long as I've known you. Has anything changed?
So we still think 40% chance of success in the next 6 months, but there are 2 issues that are impacting that ETF. One is rescheduling. If you reschedule it from Schedule 1 to Schedule 3...
This is cannabis, by the way.
This is cannabis. If you reschedule it to Schedule 3, then you take away what is known as the 280E tax. Most of these marijuana producers, their tax rate are going to go from about 25% to maybe around 10%. A lot more profitable. The other issue is safe banking. This would allow banks to issue, to work with marijuana businesses. Even though I think they can get a deal done in the Senate Banking Committee, I'm still not sure that it can get the votes towards Senate passage. We're getting close. And I think momentum could grow next year, but in the next 6 to 7 months, what I need to see is statements from Republican leadership like Senator McConnell that he's on board with this, or maybe even Tim Scott for that matter, before I can feel a little bit more positive that it can pass and get to the president's desk.
Okay, speaking of things being able to pass in the Senate, I got to throw one more crypto question at you because before the recess, House Financial Services passed a market structure bill and a stablecoin bill out of that committee. It obviously has to pass through the whole House, but I asked the chair of the Banking Committee, Sherrod Brown, if he'd looked at the legislation today, does it stand a chance in the committee? To be quite honest, he did not seem very into it. What do you think the likelihood that either of those survive in the Senate?
So we're feeling confident on a stablecoin specific bill. There's enough regulatory gaps there that I think senators and representatives can get through this. But when it comes to this holistic crypto framework, I just don't see it. The reason being is that, yes, the courts are ruling against the SEC right now. And the momentum is, will the courts create policy or will Congress create policy? The problem is that I just don't see Congress viewing these courts as the end game or they're back against the wall of like, this is it, we actually have to do it. If they push this to the Supreme Court, you're talking 2-3 years from now. Lots of things can change, and I just don't think the Democratic senators who are crypto skeptic are saying, we don't want to make a deal right now. We're fine just playing long game and seeing things change.
I love spending time with Nathan Dean. We are his clients, and therefore you are as well as a viewer and listener of Sound On. Great to have you back, Nathan, as always. Bloomberg Intelligence Senior Washington Analyst, running odds for us on a daily basis here in the Washington Bureau. If you want to know what's really going to happen, talk to Nathan. Final thoughts with Kaylee Lyons coming up next on the fastest show in politics. We're glad you're with us. I'm Joe Matthew. This is Bloomberg.
Your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. BP CEO Bernard Looney is resigning over past relationships with colleagues. This, according to the Financial Times. Since taking the job over 3 years ago, Looney has been the strongest advocate among the CEOs of the oil supermajors shift into low-carbon energy. Oracle plunging by the most in more than 3 years today after reporting a slowdown in the growth of its cloud business, raising questions about the software maker's expansion efforts in a competitive market. Oracle shares, they're down now by 13.7%. Apple has announced new higher prices for some of its new iPhones unveiled today, but what might that suggest about the broader picture for consumer spending and inflation? Cameron Dawson is Chief Investment Officer at New Edge Wealth.
We know consumer prices have risen materially since 2019, prior to the pandemic, by 20, 30% in different categories. And so we're starting to see signs that some companies are having trouble pushing price even further. So is Apple confident that they can raise prices? And if they are, that might be a read to the consumer is stronger than maybe some people expect.
And again, Apple shares down now by 2.3%. Lyft is launching a new feature that will try to prioritize matches between women and non-binary riders and drivers in response to demands for increased safety protections for its users. And those are our top company stories at this hour, and this is Bloomberg.
You're listening to Bloomberg Sound On with Joe Matthew and Kaylee Lines on Bloomberg Radio.
Just in the couple of moments Kaylee and I were talking just now, I realized I actually have no idea how to use my own iPhone. We'll get into that next on this iPhone release day after an update on world and national news with Nancy Lyons in the Bloomberg 99.1 newsroom in Washington. At least I can hear you on my iPhone, Nancy.
Yay! Anyway, House Speaker Kevin McCarthy says a formal impeachment inquiry of President Biden is warranted after House Republicans have uncovered new questions about his business dealings with his son, Hunter Biden.
These are allegations of abuse of power, obstruction, and corruption. And they warrant further investigation by the House of Representatives. That's why today I am directing our House committee to open a formal impeachment inquiry into President Joe Biden.
Speaker McCarthy says he's directing the House Oversight and Judiciary Committees to open the inquiry. It's unclear whether Republicans have the votes to bring articles of impeachment against the president. A spokesman for the White House counsel has asked on social media, why is an impeachment inquiry the next step when the House GOP investigations have turned up no evidence of wrongdoing by President Biden? Hurricane Lee is churning in the Atlantic on a northwesterly path. It's about 500 miles south of Bermuda. National Hurricane Center specialist John Cangelosi says this storm poses a threat to the eastern U.S. even if it doesn't make landfall.
Rip currents are going to happen regardless of the exact track. In fact, they're already happening, and they're really up and down the east coast of the United States, literally everywhere from central Florida through northeastern Maine.
Cangelosi says the storm is now packing winds of 115 miles an hour. The nearly 2-week search continues from Danilo Cavalcante in Pennsylvania, with authorities there saying the escaped convict was spotted in a homeowner's garage last night. He managed to escape, and Lieutenant Colonel George Bevins with state police says he did make off with a weapon.
Cavalcante is considered armed and extremely dangerous. He is now armed with a .22 caliber rifle with a scope and flashlight mounted on it.
Bevins is warning residents to lock their doors and windows. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. Now back to you, Joe and Kaylee.
All right, Nancy, thank you. You know, it's a big deal with Apple today. Everybody's talking about it. We're watching the stock. We've got new iPhones. We're obsessing over the colors and all of that. I went back to the original launch of the iPhone to get a sense of sort of the drama that was in the air, because we make a big deal about this now.
Yes, we do.
Steve Jobs, 9th of January, 2007.
Every once in a while, a revolutionary product comes along that changes everything. And Apple has been, well, first of all, one's very fortunate if you get to work on just one of these in your career.
Just one.
Apple's been very fortunate. It's been able to introduce a few of these into the world.
And today, number 15.
Yep.
I read the story here about this dynamic island alerts interface. I'm realizing as I talk to you, I have that on my phone and I don't even know what it is. What is it?
It's at the top.
Yeah?
By where your selfie camera is. And it used to just not do anything. And they said, hey, we should make that do something. And so you can look at music you're playing or your Uber driver approaching how many minutes away. It just kind of does things now.
Are you putting me on? I'm looking at my phone and I don't see any of that.
Okay, we'll work on that in the commercial break. My thing is, these phones are getting more and more expensive, Joe. That highest end model.
Yes.
The 15 Pro Max is now going to begin at $1,199. That's up $100 from last year's version. So if you want an upgrade, you're going to have to pay up for it. And frankly, I don't know if I'll upgrade because I want my purple phone, and it doesn't look like that's
I was
going
to say that. Do they have your color?
No,
Why are
I
they
don't
changing
think
the
so.
colors?
We
I
should
still
talk
thought
to
they
Tim
made
Cook
rose
about
gold.
this.
They don't do that anymore either. I've only ever had a black iPhone, I think. I need to catch up a lot. It's the iPhone 15, and it does things that I don't know how to do. Will it improve our lives somehow? I guess it will. I don't know.
There's a camera upgrade.
There's an app for that. Oh, there's a camera upgrade. Okay. We're going to go take some selfies here, and we'll meet you back here tomorrow. Join us on Balance of Power later on with Senator Tommy Tuberville. Bloomberg Business Week starts now.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
Live from the Bloomberg Interactive Brokers studio, streaming on YouTube and Bloomberg Originals. It's Tuesday, September 12th, 2023. I'm Tim Stenivek, along with my co-host, Bloomberg News Deputy Team Leader for U.S. Equities, Jess Manton, filling in for Carol Masser once again this afternoon. Jess, good to have you back with us. How are you?
It's always a blast. Very interesting dynamic, though, today when you're looking more broadly in the stock market, and especially in the oil markets when you are looking at what oil prices trading around the highest of this year, but then how that's affecting energy stocks.
I'm so rude. I didn't say happy Apple Day. Happy iPhone Day to you.
Of course, that as well.
I'm so sorry. Hey, happy iPhone Day to all who celebrate. Apple just taking the wraps off of its iPhone 15. We're going to have the latest from Cupertino. Jess did mention some of the equity moves that we're seeing. A slide in tech companies dragging down the stock market today. Investors gearing up for that key inflation report that's expected to bring more insight into the outlook for the Federal Reserve's next step. Jess, what are you doing tomorrow morning at 8:30?
Watching CPI.
Okay, that's what I thought.
That's where I'm going to be. We'll also have the latest from Detroit, where the UAW and the Big Three are facing a contract deadline. And then we are joined by the CEO of JCPenney just a few weeks after the company announced a $1 billion investment, Tim.
Yeah, we're looking forward to that. This could be his toughest road that he's taken. He's he's been in the past at Levi Strauss, other retailers, but trying to turn around what's been going on at JCPenney. A couple of years out of bankruptcy is no easy feat.
No, it definitely isn't. And then also today's big take, the biggest U.S. trading partner is no longer China. So that's going to be a really interesting story to dive deeper into, Tim.
Have you been to Las Vegas recently?
I haven't been since.
Have you ever been?
I've been a couple times,
Okay.
but before the pandemic.
I went about a year ago with Carol. We did a remote there.
Oh, that's great.
Which was great. I didn't see the mysterious $2.3 billion sphere.
Ooh.
That was being built when I was last there. But you've probably seen it on social media. It's lighting up the skies. We got a deep dive inside the mysterious $2.3 billion sphere that's lighting up Las Vegas.
It's going to be great.
Hey, let's take a look at what markets are doing with just about an hour left in today's trade. The Dow down fractionally right now. The S&P 500 is down right now a little more than half of 1 percentage point, down 25 points. The NASDAQ shedding more than 135 points as we speak, down a full percentage point. We got a great program this afternoon. Jess Menton and Tim Stenivek. First up, though, let's bring in our TV colleagues because Bloomberg's Countdown to the Close starts right now.
Countdown to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is the Countdown to the Close. Romaine Bostic alongside Scarlett Fu. We're joined right now by our colleagues Tim Stenivek and Jess Menton. Jess Menton in today for Carol Masser. Welcome to our audiences across our Bloomberg platforms, television, radio, originals, and YouTube. Tim Stenivek here. Tell me something good, Tim. Tell me you got the magic here. Yeah.
It depends on what you like, Romaine. Okay, It depends on what you like.
Yeah, not much today.
I thought of you earlier today, Romaine, because yesterday you mentioned you added to my list of gainers the weed stocks and what the marijuana stocks were doing as a result
finally
of.
went out and smoked a.
No, I didn't.
bowl.
But it's going to get easier here in New York if it needs to get any easier?
Does it?
That's the big question that I have.
Have you walked the streets of New York? It's like a cloud of marijuana smoke everywhere you go.
So that's actually what I'm glad you're
you don't even need to buy it. You can just get high just walking down the street.
Well, apparently, not enough places sell marijuana at this point because the states legally.
Because in my neighborhood, there's like these stores on.
There's like a little truck that goes around my neighborhood that is like green and they advertise it. Like it's apparently
I don't know what's going on
the gray market. But the gray market. The police don't actually care about it. That's one of the reasons why, though, New York is loosening its marijuana licensing. It's going to expand the recreational market here and allow some of those big publicly traded companies to apply to have recreational licenses here.
Yeah, and the change means that companies with current medical license in New York can potentially open a recreational dispensary next to the one of their medical dispensaries around the end of this year, but they still need to pay a $20 million fee to apply and meet some other criteria there.
$20 million.
Something tells me the guys with the van, on Court Street in Brooklyn, right outside the Trader Joe's, are not going to be paying $20 million.
I think it's the big companies that'll be doing that.
I really appreciate the specificity there for our audience there. Anyone driving right now down Court Street in Brooklyn here, you know exactly where to go. I guess the big question is, if you keep driving down there, I think at some point you hit an Apple store there, Scarlet Fu. I don't know what's more expensive right now. The taxes you pay on buying weed in New York City or buying a new iPhone, and I don't know, how much is the cord? Is that like about $20 million extra too?
That'll be $20, $30, but I think the big headline coming out of the Apple product launch was that the iPhone prices didn't go up unless you're talking about the highest end one. That one goes up by $100. But interesting that Apple decided not to raise prices, even though anyone who does buy this new iPhone, as Romain mentioned, will have to get the new cord. Forget the Lightning cord. It's back to the USB cord, which is the standard across Europe.
About time, right?
I feel like it.
I mean, okay, so do you remember back in, 2016 when Apple removed the headphone jack?
That was outrage.
Yeah, I remember that.
That was a really big deal.
I actually switched to Android because of that at that time.
Did you switch back to iPhone, or are you still on Android?
I did eventually. Because then all the Android phones got rid of the iPhone.
That was a really big deal, and that was one I heard a rumor about that like a year before that would happen, and I thought to myself, Apple's never going to do that. Are you kidding me? Yeah. Sure enough, they did it, and everything's been okay. I think this is
you just get lower quality audio, but
lower quality.
No, you just have to buy the AirPods. That's what.
And you have to buy that little dongle too.
Lower quality audio, Scarlet Fu.
Not if you get that dongle, Romain. You can actually still.
Like I said, Tim Senovic, lower quality audio.
I didn't know you were such an audiophile.
I am.
Okay. And I
have to suffer through. Actually, you know what? I actually went out and bought. I had to buy an actual separate player.
I thought you were going to say went out and got an iPod.
Well, they don't sell iPods anymore.
Yeah, you could still probably get one.
Well, yeah, they sell one on eBay
right?
for like $20 million.
Tim and I apparently keep losing our AirPods. So we feel like that needs to be a big component there with the segments and Apple's
I think they got to switch the reporting category for that one to services. It's just recurring revenue from all of us who lose our AirPods.
Did you see? I was looking at the recurring revenue they get from the devices or whatever they're calling it now. I mean, it's a huge part of their business. I mean, you talk about. I mean, it's more. They make more money off that than they do selling Macs. More money off that than they do selling iPads.
Yeah, it's remarkable.
That's their business now.
It should be its own
basically
company.
You losing your AirPods, Tim, is keeping this business afloat.
It's happening to me at least 2 or 3 times a year, and I'm not even going to get started on how long the battery actually lasts. Like,
I wonder if you just go out down to
whatever.
Lexington Avenue and just open up the grates on the sewer. How many AirPods are down there?
It's probably a lot.
I would never even walk over one of those wearing AirPods.
Elevator banks as well.
All right.
You know.
I'm being told we got to go, guys. But we're going to have much more coverage on Apple throughout the program. We got Ed Ludlow and Mark Gurman joining us a little later in the program. We'll be back together live on TV, radio, and YouTube, and then on Bloomberg Originals as well for 4 p.m.'s Beyond the Bell coverage. We're going to take you through today's market close.
We were young and proud. We were making Thunderbirds. Well, we were making Thunderbirds. We were making Thunderbirds.
Jess Minton and Tim Stenovic here in the Bloomberg Interactive Brokers studio. And Tim, the clock is ticking for United Auto Workers as the strike deadline looms. This potential strike by the union against Detroit's big 3 automakers is getting closer, with the current contract between UAW and GM, Ford, and Stellantis set to expire at midnight on Friday. If a deal doesn't get done, a strike with around 140,000 union members may last for weeks, with experts cautioning that it may have impacts on supply chains and the economy, particularly in Michigan. So joining us now is Keith Naughton, auto reporter at Bloomberg News, on the phone from Detroit. Thanks so much for joining us, Keith. Walk us through the latest of what we need to know as we do get closer to that midnight deadline on Friday.
Hi, thanks for having me on. Yeah, there has been some movement, but it's pretty glacial. The union had been asking for a 40% raise, and that has been lowered to 36%. But the best the companies have offered is 16%. So there's quite a wide gulf that they need to bridge to reach a deal on this one.
Keith, you've covered the auto industry for quite a while. You've seen your share of a strike or two. This one's different, though. This one could be different. What makes this one different than others?
Well, just the size of it, for starters. So there's nearly 150,000 workers represented by the UAW at the three companies. The union has never gone on strike simultaneously at all three companies in its 88-year history. They usually just strike one company, as they did in 2019 when they struck General Motors for 40 days. So
okay, go ahead. Sorry, go ahead.
So this would be unprecedented, and its impact would be vast, because the auto industry makes up 3% of the U.S. GDP, but as you guys noted, it's much larger in Michigan and throughout the upper Midwest, where most of the big three's plants are located. So what the economic experts tell us is that it would tip this region into a recession.
Yeah, and politically, not to mention what it would do ahead of the 2024 election, when those three states are just so important for whoever ends up winning the White House next year. So Keith, if they do strike all three at one time, how long could the strike go on? Because there's only so much money in the UAW's so-called strike fund. Explain what that is and how that could run out quickly.
Yeah, there is only so much money there. It's hard to know exactly how long it would last. There's over $800 million in it, but as I said, lots of workers to spread that among. They get $500 a week in strike pay. So it's hard to know exactly how long it would last, but obviously not forever. But the effects of the strike would be crippling on the companies too. So there's motivation on both sides to try and reach a deal if it does come to a strike.
Walk us through what the latest is that UAW is asking for.
Well, so beyond the now 36% raise, they would also like a return to traditional pensions. They would like a reduction to a 32-hour work week. They want an improvement in pension payments to retirees. They want retirees to get health care benefits again. And they want an elimination of what are known as tiers. This is where newer workers get paid less for doing the same job. They want everybody to be paid the same. Right now, the companies are offering a grow-in period to that full wage of $32 an hour of as quickly as 5 years. It had previously been 8 years. The union wants it eliminated altogether.
What are the big three's counter proposals to some of the biggest sticking points?
Yeah, the big three have offered, as I said, raises of up to 16%. They're offering some additional days off. Juneteenth in particular has been offered as a holiday by General Motors and by Stellantis. They offer sort of these big lump sum payments, both as a signing bonus and then throughout the contract. They do offer profit sharing. But none of this really has met the union's demands so far.
All right, so many questions, Keith. We only have 5 minutes left, but I'm going to try to keep it. I'm going to try to keep them brief. So, Shawn Fain, head of the UAW. Is he different than other UAW leaders in the past? You've spent some time with him.
Yeah, we did spend quite a bit of time with him at the union's Solidarity House headquarters in Detroit, and we did a profile of him. He definitely is different. Let's start with the fact that he's the first directly elected president of the UAW ever, and that is a result of a huge corruption scandal that hit the union, sending several members to jail, including the two previous presidents, because they were using union funds to finance lavish lifestyles. So he came in as a reformer who was going to root out corruption and also finally get the workers the good contract that he says they deserve for helping the companies survive the Great Recession of 2009, when you might recall General Motors Ansler went bankrupt and got government bailouts. He says the workers have never been paid back sufficiently for that. He's quite a firebrand. He doesn't look the firebrand part. We think he looks a little bit more like a Sunday school teacher. But what he says is very, very tough rhetoric. And for example, he goes on Facebook Live and does these updates on bargaining, and he always has a trash can to show where he thinks the company's proposals belong.
Leveraging social media.
Right. So can workers ever sufficiently be paid back for what had happened in the past?
Well, what the union points out is that CEO pay has increased by 40%, they say, and worker pay over the last 4 years included 2-3% raises. So they don't feel like they have shared in the gains as much as the top executives have.
Keith, what about when it comes to what's going on at the UAW and the big three versus what's happening at, I don't even want to call it an upstart anymore, but the most important electric vehicle maker in the world, Tesla. The workforce is not unionized. Explain to me the dynamic when it comes to competition here between the big three and versus the upstarts in the EV side that don't have unionized labor.
Right. So Tesla doesn't have a union, you're right, and their labor costs are lower than the big threes. The big threes labor costs currently are $64 an hour when you include the wage and the benefits that they receive. Union workers and workers throughout the automakers receive very good health care benefits, for example. So Tesla has lower labor costs. Tesla, of course, is the only company in America that actually makes money from selling electric vehicles. GM, Ford both lose money on their electric vehicles. Stellantis doesn't have any yet. So Tesla's labor advantages is one of the reasons that it makes money, but certainly not the only. This is an argument the auto companies are making, though, that they need to be cost competitive with Tesla if they're going to make money on, high-cost electric vehicles. The battery alone is a very high-cost item in an electric car, so it's not like building a traditional internal combustion engine car.
Do you get a sense that they would lose out on that competition in workers that these big three currently have to some of these EV makers?
Well, I mean, what the union would argue is if they can land, a better pay and benefits, which they already have versus other auto plants that are non-union, then more auto plants will want to go union. But, if your costs get too high, the companies would point out, then you just can't compete. You can't price your vehicles competitively, and you can't compete, and you'll lose ground to the Teslas and the others.
Okay, I've left you 1 minute, Keith, to talk about the politics of this. President Biden has said he wants to be the most pro-union president in history. You're not a politics reporter, but you certainly know a lot about the political implications of a strike in the Midwest. Talk to us about how the White House can thread this needle.
Yeah, so let's start with the purple state of Michigan that went for Trump in 2016 and for Biden in 2020. The current polls in Michigan show Biden up by 1 percentage point. So it's a dead heat in Michigan right now. So there couldn't be higher stakes. Michigan's got 17 electoral votes. This is an essential state if Biden wants to get reelected. Wisconsin, another state that is essential to his reelection, also has an automotive presence. Throughout the Midwest, upper Midwest, it's very critical that he carry this region. This is the region that Trump carried in 2016 that led him to victory.
Keith Naughton, auto reporter at Bloomberg News, joining us on the latest when it comes to the UAW and that strike. The clock is ticking. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg, and we have got just about 39 minutes to go ahead of the closing bell. Stocks lower across the board, and this update brought to you by Glen Mead. Glen Mead offers sophisticated wealth and investment management solutions combined with the personalized service you deserve. Your wealth, your mission, your investments. Let's talk. Visit glenmead.com to learn more. S&P 500 index right now down 28 points, a drop there of 0.6%. A slide in tech companies dragging down stocks today. NASDAQ down 147 points, a drop of 1.1%. The NASDAQ 100 index down 1.1%. The Dow lower by 44 points, a drop there of 0.1%. 10-year yield 4.26%, with a 2-year now at 5.00%. Oracle certainly weighing on U.S. stocks today. Oracle shares after earnings last night down now by 13.5%. We've got spot gold down $8 the ounce to $19.13, a drop there of 0.5%. And West Texas Intermediate crude advancing 1.9%, $88.97 a barrel on WTI. Apple shares after introducing a slew of new iPhones or upgrades. We have got Apple shares down now by 2.2%. Wall Street, meanwhile, looking ahead to tomorrow morning's inflation print when we get the latest reading on consumer prices and what it means for the Federal Reserve. Kathleen Bostancic is chief economist at Nationwide Mutual Insurance.
I think the odds for soft landing have gone up. We ourselves are a bit more cautious, but we've trimmed the recession shortfall. We now think it's more of a mild instead of moderate. We have to be, reflective and respect the incoming data that inflation does seem to be moving, downward more quickly than we thought.
And you can hear more of the conversation on the Surveillance podcast. You can download it wherever you get your podcasts. Again, recapping, stocks lower across the board, with the S&P now down 30 points, drop there of 0.7%. iPhone 15 Tuesday, and Apple down 2.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thank you so much for that update, Charlie Pellet. Really do appreciate it. Well, today is the day the world sees the new iPhone. I don't know, it's not like it used to be. Maybe it is. I don't know. We'll talk about that with our next guest. Apple unveiling its iPhone 15 along with a heftier price for the top model. The Pro version is going to remain at $999, but the Pro Max will now start at $1,199. That's up $100 from last year's version. We also saw some new Apple Watches with eco-friendly materials and more. Apple shares, by the way, down 2.3%. Mark Gurman is chief technology correspondent at Bloomberg News. He joins us on Zoom from our Los Angeles bureau. And we got Ed Ludlow, the co-host of Bloomberg Technology on Bloomberg Television. He joins us from Cupertino. Ed, I want to start with you. I've been to a few of these iPhone unveilings back in my day. Probably 3 or 4 of them. And, they're always, exciting events. There's a lot of pomp and circumstance around them. What's the vibe there today?
I don't know, man. The vibe is strong. I don't know. I think this has all of the energy and allure as every generation event that's gone before it. It was packed down there. And I'm going to let Mark talk about how substantive or not these hardware upgrades are. But the intense interest in the Pro and Pro Max was phenomenal. Gurman, if you're listening, I just held both of them in my hand. And you were absolutely right on every single detail. The titanium sides really jump out at you. It's definitely a lighter weight product, right? You can feel its durability. And everyone down there in the Steve Jobs Theater is talking about this A17 processor, 3-nanometer tech. Everything that you reported, basically, you were spot on with. But I would say, Tim, the energy here, Tim Cook was taking selfies with all of the attendees. It has matched prior events I've been to.
Okay, that's good to know. Hey, Mark Gurman, come on in here and just follow up on that. Ed says everything you reported about these phones was right. No surprises for us. Any surprises for you?
Thanks for having me. I mean, the important thing is now that the news is out and people get to digest it and people are excited about what these new phones mean, both consumers who just want to get the new iPhone in their pocket and shareholders who are trying to see how these new devices will have an impact on the company's stock. I think Apple did what they needed to do today. Certainly, they drummed up a few things with their marketing might. They put that new fancy A17 Pro name on the A17 chip. They talked about some of the advancements there. But if you really take a step back, 10% CPU leap, 20% GPU leap, not entirely significant compared to overhauls to the chip in prior years. The titanium is basically the biggest introduction they had today. One pretty nifty feature that I think wasn't expected ahead of the announcement today is certainly the use of a spatial video camera on the back of the iPhone 15 Pro and Pro Max, meaning you can take 3D video, watch it on the Apple Vision Pro next year. Now, this is not going to impact most consumers, but it's a nifty, cool feature that shows the power of these new cameras. If Ed is still there, I'm curious on the new colors for the Pro versions, what stood out to him.
Yeah, Ed, let's bring you back in here. What's your take on
colors?
Yeah, of the Pro models. There's
Did
the
Mark
blue
say colors?
Colors, yes. I am curious.
No, you're
blue, black,
you're exactly
natural,
right. No,
white.
This was my other main takeaway, because if you put side by side the 15 Pro and Pro Max with the base version 15 and 15 Plus, the 15 and 15 Plus come in these beautiful, vibrant pastel colors, yellows, greens. Nice, if you're into that. I always get a blue iPhone for the Chelsea Football Club. That's just, I've always been honest about that on air. I also use a Samsung, by the way. I'm technology agnostic. But the Pro lines come in a much more limited color range, and that is very clear, Mark, especially when you're inside the Steve Jobs Theater display room and they're all on display side by side. I don't know why they went that way.
Yeah, certainly it's an interesting dynamic with that new titanium frame. What I think that happened here is the titanium allows them to try some new things. One of those things is not polishing with a color the material, which is something you need to do with stainless steel. So they're able to have that raw, natural color for one of the models. I think the blue personally looks interesting. I have the black 14 Pro Max right now, so I don't think I'm going to get the black again. No gold, which could be interesting for some markets. In China in particular, gold is a very powerful and popular color. Red would have been a very popular and powerful color in China, but those two colors are elusive for this generation. Maybe they'll figure out a way to get next year red and gold out there, but certainly color is a big part of this iPhone launch, the overall appearance. I think the periscope camera, the new lens system on the 15 Pro Max is going to be quite impressive and quite useful, but I certainly think that they've done enough to make this a hot seller this fall.
I've always been a fan of the gold or the rose gold. But Ed, Mark was just mentioning earlier, too, about Apple's stock price down more than 2% as we head closer into the closing bell here. But historically, the product releases initially just haven't always pushed shares higher. What's your sort of view on this for today?
Yeah, look, let's regroup in 24 hours and look at the sell side and investor notes. But, go back to 2011, there have been 13 iPhone events, including today's. The stock has fallen on 10 out of 13 occasions in the session on the day that Apple's had an iPhone event. The bar's kind of high. The story with Apple, and Apple has dominated news flow recently, is 3/4 of overall sales decline, guidance that indicated we are heading towards a 4th consecutive quarter of overall sales decline. And in the June quarter, China was a bright spot. Greater China grew top line 8%. With a heavy emphasis on switchers, consumers switching to iPhone either for the first time or from another brand. The news flow and the stories and reporting about China's central government clamping down on iPhone use in the public sector changes the narrative potentially for the rest of the year. But the market doesn't agree to what extent. What we wanted to know was the hardware upgrades and the tech upgrades here, and Mark's really walked us through them. Do they resonate with the Chinese consumer? That's a big question going forward.
Mark, Apple is also set to sell made in India iPhones on its launch day for the first time. What's behind this move?
So yeah, they've been producing iPhones in India for a couple of years now. They've really ramped that up in recent quarters, and so the goal is to get in India the made in India models on launch day for the first time. They've actually sold iPhones in their India stores and in the India online store from launch day in prior years. But according to my colleagues reporting, this will be the first time that the first models will be the made in India models.
Hey, Ed, what should we make of the sustainability initiatives that we heard from from Apple today. They're making the new aluminum watches, first carbon neutral devices. They're dropping leather from all iPhone and Apple Watch accessories. What do you make of it?
Yes. Yeah, I'm glad that you noticed it, because what was interesting in the lead up to this, and indeed during the event, is almost every analyst, market analyst, research analyst, and investor that I've spoken to was actually interested in that. You know, they buy into the idea of Apple's net zero goal for 2030. But the reason that we focus on it from a kind of markets perspective, well, is supply chain. You know, Apple seems to be able to move quite nimbly and swiftly on its supply chain. And they confirmed a number of products today are going to be either net zero from this point on or in the very near term. You know, one of the things I'm going to review on my social media piece that's coming shortly is, you know, they scrapped leather from the accessories offering and are using more sustainable materials on that side as well. It kind of fits with the brand of this company. And as we know, for investors from an ESG perspective, that can count. You know, you see many of the mega cap tech names, you know, think about their impact on the world. And, you know, Mark reported in the Top Live blog on all of those that you can recap.
Mark, we only have about 15 seconds left, but our producer, one of our producers wants to know, are there plans for Apple to lower the cost of the iPhone 14 now?
I believe the iPhone 14 is sticking around on sale, and you'll be able to get them at a cheaper price.
We don't know how much cheaper, though, right?
Not yet. Probably $100.
Okay, but Mark, you're still upgrading.
I'm still upgrading.
You have to. You do every year. You do every year.
Yes.
All right. Mark Gurman, Chief Technology Correspondent at Bloomberg News. He joins us on Zoom from our Los Angeles bureau. Also, Ed Ludlow, the co-host of Bloomberg Technology on Bloomberg TV, joining us live from Cupertino.
Now let's get a check on the latest world and national news from Nancy Lyons in Washington, D.C.
Thanks, Jess. House Speaker Kevin McCarthy is launching an impeachment probe into President Biden for what he calls, quote, a culture of corruption. The California Republican is bypassing a House floor vote to move to an impeachment inquiry, with many saying he did not have the 218 votes he needed.
This logical next step will give our committees the full power to gather all the facts and answers for the American public.
McCarthy says Republicans have been looking into whether Biden played a role in or benefited from Hunter Biden's overseas business affairs. The White House has said President Biden was not involved in his son's business dealings and has done nothing wrong. Democrats have painted the probe as a political payback for investigations into Donald Trump. North Korea's Kim Jong-un is in Russia, arriving earlier today on his personal train. He's expected to meet with President Vladimir Putin with an arms deal apparently up for discussion. Bloomberg's Sang-mi Cha is following developments from Seoul.
North Korea is one of the countries that has the largest stockpiles of weapons in the world, and they have these Soviet-era system weapons that are interoperable with Russia. So these are some of the artillery shells and even the anti-tank missiles that Putin can benefit of.
Bloomberg's Sang-mi Cha in Seoul. The NFL season is over for new Jets quarterback Aaron Rodgers. Both the NFL Network and ESPN are reporting an MRI performed today confirmed that he did tear his Achilles tendon and will require season-ending surgery. He only took 4 snaps before he went down in last night's game against the Buffalo Bills. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. The Dow, the S&P, NASDAQ, all declining. Apple Tuesday. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks in the red right now, helped by a big drop in Oracle. Dow's currently down 32 points. S&P's dropped 26, and NASDAQ is lower by 147. The U.S. 10-year yield up 4.26%. Gold is down 9. Oil is climbing, and Bitcoin is higher by 4%. Among the main 11 S&P sectors, leaders were energy and the financials. Tech and telecom were under pressure, and leaders to the upside in the Dow, Goldman Sachs and Walgreens, while Apple and Procter & Gamble led to the downside. In others, Northern Trust plunged intraday after warning on net interest income, and Eaton dropped intraday after backlog comments. Wrapping things up, Oracle fell as much as 15% after earnings. That's the most since 2001. Live from the first breaking news desk, I'm Bill Maloney. Charlie.
Okay, we thank you very much, Bill Maloney, and to hear live breaking news over your Bloomberg, type SQUA, S-Q-U-A, on your Bloomberg terminal. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
Jess Minton and Tim Stenovic here at the Bloomberg Interactive Brokers studio. Now, with just 20 minutes under that to go before the closing bell, U.S. stocks did lose ground today after oil prices climbed to their highest level of the year. We did talk about Apple earlier, Tim. Those shares down more than 2% after its iPhone 15 event, while Oracle is headed for its worst day in over 2 decades after posting revenue and sales guidance that was weaker than analysts had expected. So big move there. So that's why you're seeing energy higher and then more of these growth-oriented companies and corners and sectors of the market lower. Joining us now to weigh in on all things markets is Catherine Krantz, Chief Executive Officer at the Center for the Macro Specialist Designation. I wanted to start off, Catherine, to tell us about your firm and what it is that you do, because it's really interesting too. This is supposed to be basically a designation that is more complementary to a CFA.
Correct. Thanks, Jess. Absolutely. So our firm is focused on all things macro. So we have basically 3 ways that we interact with our clients. We have a traditional sell-side research product with our founder, Francois Trahan. He has been a macro leader for decades, and so we sell that product to our institutional clients. Last year, we started the Macro Specialist Designation because we became aware that it's not something, macro is not something that's really taught anywhere. It's not the same, macro investing is not the same as what you learn in a macroeconomics curriculum in college. And it's really not something that's part of other designations. It's something that you tend to learn getting beaten up by the cycle year after year.
So say tomorrow, 8:30 a.m., Tim and I were talking about this earlier, CPI report comes out. This is different than if you're just reading some of these macro data points that are coming out each morning.
Oh, yes, it's different. So basically, we teach our framework, which is rooted in monetary policy, obviously the Fed's moves, and how that impacts interest rates. And we look at how interest rates basically leading indicators like the stock market with about an 18-month lag time. And then that helps us by looking at where interest rates have gone. That helps us anticipate the direction of the market. And then obviously internally, which segments of the market will outperform.
Okay, so given that you're CEO at the Center for Macro Specialist Designation, where are we right now and where are we going? What do you like?
Unfortunately, we do not have a very rosy outlook. Something that we hear continually these days is that the lead and lag times of policy's impact on markets has changed. It's different this time.
So it's longer and more variable?
Well, people are saying it's shorter and we're over any pain. We disagree. We don't see any evidence that it's different. We are just now coming up to the 18-month anniversary of the first Fed rate hike of this cycle. And it has been the steepest, quickest tightening cycle since basically Paul Volcker's days at the Fed. So add into that the already tightening of lending standards you've had due to the banking crisis, and there's a whole lot of tightening in the pipeline that we don't think has been priced in yet.
What pockets within the economy raise some red flags to you at this point? When you do have data, say obviously GDP is backward looking, but when you're looking at that, I know we'll have another reading of retail sales later this week, but some of this consumer spending data has still held up. So where's the weakness coming from?
Yeah, we're not surprised by that. Like I said, we're really just getting to the point where the impact of tightening is going to start flowing through to the economy eventually and stocks in general. You know, we keep a close eye on earnings. It's basically when earnings growth goes negative that things start to get really bad. So we monitor earnings across all segments of the market. You know, we've seen the ISM manufacturing survey is already in contraction territory. So, you know, we think that things are going to deteriorate from here. As I mentioned earlier, obviously the tighter credit standards, which is not something that usually happens until you're much further along into a slowdown. And so the fact that that's already tightened so much it's very concerning to us. So, you know, we're really looking towards everything defensive. You know, what outperforms is boring things like staples and you know, the things that have more stable earnings profiles.
So staples, you know, other defensives. What changes your mind and makes you more optimistic? Like, what would you have to see over the next few months to say, wait a second, we actually have the worst of this behind us?
You know, I mean, based on our framework, there's really almost nothing that could change. I mean, we feel like all the tightening is already baked in the cake. It's there. So
it's baked in the cake, but you said that it hasn't been priced in.
Right, but I'm saying that you can't undo it. So
Okay.
even if the Fed were to suddenly pivot and lower rates, it then will take another 18 months for that to feed through. Mm-hmm. So we don't see a way out of this. We think it's going to be a tough year.
How much longer do you think it'll really be able to tell in the economy from the full effects from the last 18 months and the 11 rate hikes that we have seen since March 2022?
Yeah, well, we think this is going to be a story that covers really most of 2024 because, as we said, it's been the steepest, most intense tightening cycle. And so given that we're only coming up on the 18-month anniversary of the first hike, we have a long tail to price in, so we think that's going to take some time to play out.
What do you think are some of the risks to your case for the economy, to the flip side of that argument?
Yeah, I mean, look, we don't really like to ever say it's different this time. You know, we do stick to the framework, but, you know, there's always a chance that things could evolve and change. We don't think it's likely. You know, we've had a recession every time CPI has been above 5%. We've had a recession in 10 of 13 of the past Fed tightening cycles, and Chairman Powell pointed to some of those instances where there was not a recession, but in none of those instances did we have an inflation problem.
You know, you're focused on the macro, you're focused on inflation, but you've talked about the tightening cycle and where we are with the Federal Reserve. Do you think the S&P 500 has hit its low for this cycle? That was about a year ago, back in October, or do you think there's more to come?
No, we think there's more to come, and it's funny. You know, you mentioned last fall, and at that point, our framework was telling us that basically because of Chairman Powell's comments about inflation being transitory, we saw about a 4 or 5 month dip in interest rates, which ended up feeding through. So we said if our framework holds, which it usually does, we should see a bear market rally happen. And so I was just looking back at some of our research from that time last year, and we were writing about how we couldn't convince anybody to be bullish. And now it's completely flipped on its head. So we have had that rally. It's been a little bit longer than we anticipated, but we think that's kind of running out.
We only have about 20 seconds left, but is there a danger, though, of missing out on it since almost been a year there if you missed that rally?
Yeah, I mean, we're advising people to get more defensive and a little, you know, protect their portfolios and take this chance to really realign for what we think could be, you know, a tough recession.
All right. Catherine Krantz, Chief Executive Officer at the Center for the Macro Specialist Designation. Really interesting thoughts here for you to give to us today. Heading into the closing bell with just about a little over 10 minutes to go there, Tim.
Yeah, we got in the red on the Dow, the S&P 500, and the NASDAQ. This is Bloomberg.
company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. BP CEO Bernard Looney has resigned with immediate effect over the failure to fully disclose past relationships with colleagues. A 10-week, high-stakes antitrust trial involving Alphabet's Google is now underway in Washington. And with more on that story, here's Bloomberg's Kimberly Adams.
Charlie, the Justice Department says Google pays more than $10 billion a year to maintain its position as the default search engine on web browsers and mobile devices, stifling competition. In opening arguments, government lawyer Kenneth Denser said Google became a monopoly by at least 2010 and today controls more than 89% of the online search market. The monopolization trial is the first pitting the federal government against a U.S. technology company in more than 2 decades. The Justice Department and 52 attorneys generals from states and U.S. territories allege Google illegally maintained its monopoly by paying billions to tech rivals, smartphone makers, and wireless providers in exchange for being set as the pre-selected option or default on mobile phones and web browsers. Charlie?
And that's Bloomberg's Kimberly Adams reporting. Lyft is launching a feature that will try to prioritize matches between women and non-binary riders and drivers in response to demand for increased safety protections for its users. And Amazon is offering a new service that will let its 2 million merchant partners deliver inventory directly to physical retail stores and warehouses. And those are some of our top company stories at this hour. I'm Charlie Pellet. This is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
It is Bloomberg Business Week. We've got less than 5 minutes to go until the U.S. close here of equity markets. Taking a look at stocks one more time before we get there. The Dow down fractionally right now. The S&P 500 down a little over half a percentage point, down about 24 points. NASDAQ, though, taking the worst of it, down a full percentage point, 139 points to be exact. Jess, speaking of the NASDAQ tech companies, a story in here from today by our own Ian King, who knows all things when it comes to chips. Not to mention his fantastic reporting around ARM and that IPO. A great one about ARM's CEO gearing up for the biggest IPO of the year, pitching investors on a pivot.
His message to potential shareholders is that ARM is poised to become a bigger and more profitable business, not just because of the industry-wide boom in cloud computing and AI, but also due to a major change in how it operates. So for most of its history, ARM's main focus has been designing chips for obviously smartphones and other electronics, and then selling that tech for pennies per chip to companies like Qualcomm. But now ARM is doing complex design work focused on its specific products. And so this is supposed to be tailored for what it sees as key areas of growth, Tim.
Of course, the company's in the midst of a roadshow right now, and getting that message across is key to a lofty valuation. ARM had said it's seeking as much as $54.5 billion in its IPO this week, though it's proving so popular with investors that the company may actually raise the price range for the shares. The listing is oversubscribed, Jess, by 10 times. Bankers are planning to stop taking orders a day early by Tuesday afternoon. That's according to people familiar with the matter. ARM does still plan to price its shares tomorrow, Wednesday, the people said. But it's not uncommon for books to close early on an IPO, which often indicates that there's strong demand.
Yeah, so this is a big markup from what had happened in 2016. And a lot of questions, especially when you're thinking about the IPO market, and especially over the past year, not surprisingly, when you're thinking about just how aggressive the Fed was hiking rates and how you saw that correlation obviously when it comes to companies that are going public, trying to raise capital and things like that. Very difficult there. But we spoke with Amy Orr last week, Tim and myself, and actually I think it was Paul Sweeney whenever you were out that day.
I think that was Friday.
And so we had asked her about whether or not that could sort of spur up some more IPOs this year. It's still questionable with some of her sources, but the first half of next year, though, we might be getting some glimmering hopes for that to pick up.
We'll see when Birkenstock goes public. Hey, coming up next, we're going to be joined by our TV team for our Class Plus platform coverage. Bloomberg's Beyond the Bell starts right now.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Scarlett Fu. We're counting you down to the closing bell, and here to help take us beyond the bell. It's a global simulcast with Tim Stenevec and Jess Menton. Welcome to our audiences across all of our Bloomberg platforms. Coming off a day yesterday, Tim, where we saw the NASDAQ 100 rally 1%. All that being taken back today with the NASDAQ 100 down 1%.
Yeah, give and take, right? That's what happens. Hey, we just had a really, kind of a downer conversation. Catherine Krantz over at the Center for Macro Specialist Designation. Here's what she told us. She thinks that even though we're a year away from the lows of last October on the S&P 500, she doesn't think the lows are actually in for this cycle. She's very concerned about what 2024 looks like and says it's not going to be a good year.
October 12th was that closing low for the S&P 500 last year, but if you are an investor and you missed out almost a year out, I mean, these are double-digit gains in the S&P 500 and the NASDAQ 100, but yet when you look over what's happening with money market funds, especially with where yields are, you still have a lot of people, especially with money market funds being at a record at around 5.6 trillion, people still sort of skeptical of this rally.
I am curious, though, when we talk about, this isn't the first time I've heard people, Scarlett, talk about these October lows, but I mean, we're talking about a downdraft of like 20% to get back down there on the S&P.
No, that's a really good point. I mean, I think a lot of people might have missed out on what had been an unexpected advance, and they're wondering whether they still have time to maybe get in on this a little bit here.
Yeah, I mean, interesting, though, on this day where we're seeing the NASDAQ really take it on the chin. The S&P only down fractionally on the day, but believe it or not, the Dow holding up, relatively unchanged on the day. The Russell similar as well. And the S&P 400 mid-caps actually in the green, though only fractionally. You put it all together, once again, a mixed market. You could call it a holding pattern, if you will, as we wait, of course, for tomorrow, 8:30 a.m. Washington time, that big CPI report. Here are the numbers here as we wait for them to settle. The Dow Jones Industrial Average down roughly 16 points. We're going to call that basically unchanged as we wait for the numbers to settle. The S&P down 25 points, or about 0.6%, while the NASDAQ composite is lower by about 144 points, or 1% on the day. And the Russell 2000, as we speak, again, waiting for these numbers to settle, poking into the green. Looks like it's going to finish with a fractional gain, a tenth of a percent.
There's a little, hey, we'll take it. There's a little bit of green on the screen. Taking a deeper look at the S&P 500.
It's called picking up pennies in front of a steamroller.
Yeah, that's true. 212 stocks moving higher. 287, Scarlett, in the S&P declining today.
All right, let's take a look at how the S&P 500 stacks up when you break it down by 24 industry groups. Energy in the lead there, up by 2.3%, with all 23 big cap energy names higher on the day as oil prices climb. WTI approaching $89 a barrel. Banks also doing pretty well, led by the likes of Zions and PNC as they make comments at an industry conference. On the flip side, software and services, that's Oracle. Oracle dragging that group lower. Household and personal products also lower by about 2% on the day.
Yeah, Scarlett hitting the nail on the head when it comes to the gainers that I picked for today. Let's start with ExxonMobil. That rally in oil stocks today, sending energy companies higher. Shares of ExxonMobil higher by close to 3% on the day today. On a points basis, the best performer in the S&P 500. I should note Chevron up there as well. Let's take a look at shares of WestRock moving higher on some M&A news. Jumping as high as 7% earlier in the session, though closing higher by 2.76%. This after Smurfit Kappa and WestRock agreed to combine. That forms a packaging giant worth around $20 billion. We should note this comes at a time when there are some concerns about demand when it comes to container board prices coming down as well. WestRock shares finishing the day higher by more than 2.7%. And then those regional banks actually having a good day. PNC Financial Services Group, Scarlett, as you mentioned, shares rallying there, outperforming the broader market. There was some sector presentations at the Barclays Global Financial Services Conference. There, we heard from William Demchak. He said on a call that net interest income is expected to decline slightly, will be toward the low end of the 3 to 4% range that was previously stated. He did also mention, Jess, a structural program on expenses that will be announced on earnings day. Shares higher for PNC by 5.8%.
I have to, of course, point to Apple when I am doing the decliners, falling just under 2%. So this is its worst day just since last Thursday. But to put into context, historically, when Apple does have big product releases, initially those haven't really always pushed shares higher. So we have to see how things react over the next couple of days or so. But another stock.
Did you order a new iPhone, Jess?
I probably am going to, because the battery on mine is not very good at this moment. And maybe, you know what, a pair of AirPods, like Tim and I were talking about earlier.
Start the rally.
Oh my God.
Suckers all got them.
So they're going to be getting my money again soon here. I can't get out of this.
You have to take out a loan for that.
Oracle. So ticker symbol ORCL. This, quite a move here, shedding more than 13%. So this is its worst close in more than 2 decades. So the worst since March of 2020 there. And also when you're looking at what's happening, or excuse me, the worst since March of 2002. It's so, every time we say March of 2020, it's always comes off this tongue because of the pandemic there. But I meant March of 2002 there for Oracle. But that obviously coming since the software company reported disappointing revenue late Monday and issued weaker than expected guidance. And then also looking over at Northern Trust. So that's ticker symbol TRS. It's down almost 7%, so that's its worst day since April 25th, but that did fall as much as 9.4% earlier in this session, so it came a little bit off of that, but it did warn that net interest income on that and really pressuring the shares there. But the stock is down pretty significantly still, close to 20% year to date.
Yeah, let's take a quick look at the yield space. Most of the activity, once again, was on the short end of the yield curve here with a bit of a sell-off there, a modest sell-off to be sure, but still pushing that 2-year yield to a close above 5% here. That is the backdrop, of course, as we head into tomorrow, Scarlett, 8:30 a.m. Washington time. We're going to get the latest consumer price index numbers here for August, and at least from the headline number, the expectation is for a re-acceleration in some of those numbers. I know the Fed, of course, likes to back out, food and energy, all the things that, regular people care about. But nevertheless,
I don't buy any food. I don't buy any energy.
Of course not.
None of that stuff matters to me.
But, this is a big issue here because we talk about this idea as to whether the fight had been won against inflation here. And I think we get these little reminders, should the economists be proven right, that we're still far from mission accomplished.
I mean, as long as we're filling up our gas tanks or charging our cars using fossil fuels, I don't know if we can, the fight can ever be won at this point because oil prices are out of the control of the Federal Reserve.
They are, and we saw that uptick. What is it now with the Brent crude firmly above 90, and I think WTI at one point today was above 89.
Yeah.
So we talk about this idea of how that translates into what people are paying, and it's also the issue too, guys. And we don't talk about this much. We talk so much about the idea of the prices going up, but we kind of forget that the prices that went up, at least for a lot of items, haven't actually come down.
I think that's a really important point. Sure, inflation is slowing. It's targeting 2%, but it's still an increasing, right? It's just a slowdown from what it had been, and people don't think that way. You think about how you want to go back to the way it was rather than, oh, it's rising less than anticipated. One thing that's worth noting here, I didn't realize this, but Walmart shares are at a record high, and the CEO had made some comments today about how he's anticipating a pretty good holiday season. You talk about inflation, Walmart has done, its reason of being is to keep prices low, keep prices affordable for its consumer. It's seeing pretty good things ahead, especially as it gets a handle on inflation.
Barclays actually upgraded a number of retail stocks coming into August ahead of a lot of those retailers reporting earnings a couple of weeks ago. So they're growing a bit more optimistic when you're looking at retailers, specifically in 2024, but then also that case of really not seeing the consumer when people keep talking about things breaking down. Clearly not there yet when you're looking at a lot of these data points. And we'll also get a number reading on retail sales later this week.
You guys are setting me up perfectly to just tease our next guest. Mark Rosen is going to be joining us in just a few minutes. He's the CEO over at JCPenney, Romaine. He's been there for a couple years at this point.
Of JCPenney?
Of JCPenney, steering it out of bankruptcy. He's a veteran of Walmart. He's a veteran of Levi Strauss as well. The company recently announced $1 billion in investments, not just in its stores, but in technology. Yeah.
That's so funny. I was having this conversation with my family. We actually went to a mall over the weekend, and there was a defunct JCPenney. You could still see the sign, but the store was gone. And the big question was, does JCPenney still around?
Well,
but
you can tell him.
You just answered the question.
You can tell him yes.
Okay.
Where was this mall? Was it a local mall, or were you guys like jet setting somewhere?
It was in New York State, Tim Stone.
Okay. I never get the invitations to these.
Jet setting to West Nyack, New York.
I like Nyack. Nyack's great.
There are more former JCPenney stores than there are JCPenney department stores. It feels like when you travel around.
Yeah, I don't know. I think the last time I went into one of those stores was several years ago, and it was kind of a little bit of a mess.
Yeah, I mean, also kind of just reminds me of Sears and the problems that, I mean, obviously very different stories there, but when you think about some of those stores
they
like
pretty
that.
much ran that into the ground.
Right.
Yeah.
I mean, but all those legacy, I mean, you go back, I mean, I'm older than most of you guys, but I mean, you go back to Sears and Montgomery Ward's and JCPenney and just how kind of those stores couldn't really survive, at least not in mass. And you sort of wonder what they did wrong then and whether you're going to see something play out similar with the current crop of department stores that are out there.
Yeah, the big question is, before the pandemic, they were trying to turn these into spaces into experiences, right? What could they provide that couldn't be provided
Well, can
online?
I just tell you something? I don't go to malls often, but one thing I was interested, that struck out at me at this particular mall I was at was there wasn't a lot of retail in there. It was, restaurants and comedy clubs and arcades. And basically, you really weren't there to buy actual physical goods.
It's kind of like what we used to do at malls when we were actually kids, right? Go out and hang out.
Wander
at the malls.
around.
Yeah.
Just get everything
Have you guys been to the
online.
American Dream Mall?
Yeah, I just went
in
down
New
to the
Jersey.
river and
Have any of you been there?
Skip rocks.
No.
I've been to Mall of America.
I went to the American Dream Mall. You can do indoor skiing. I did that a little bit. It's actually
American Dream Mall. That's right next to the Meadowland. I did go there once.
Go skiing.
Be careful. You don't want to tear an Achilles or anything going down the street.
365 days. Yeah. Oh, okay. Too soon. All right, we're gonna have to go. Yeah, too soon.
That's his cue.
Do they still have to pay out the rest of his contract? I feel like 3 snaps, 4 snaps, or whatever it was. They should just be like,
maybe they file for
Can we talk about?
Is there an out clause there?
Right, can we talk about the U.S. Open still?
The U.S. Open.
Yeah.
Can we just talk about the Jets?
All right, we can't talk about the Jets. I'm told
When
we have
was
to
the
go.
last time they won?
We got to go.
Anything?
I got to keep
Like
things.
the
I got to stay on
1920s
task
or
here.
something?
That is going to do it for Beyond the Bell
Anytime I could trash
this
the Jets, it's a
afternoon.
good day.
Thank you, Romain.
Yeah, sure thing.
This is our cross-platform coverage of the market close on Bloomberg TV. We also do a lot of sports, as you can tell.
Oh, absolutely.
We're on Bloomberg Originals and YouTube. Meantime, catch us same time, same place tomorrow. Brokers Studio here in New York. It is Bloomberg Business Week. Having a fun chat with our friends over at Bloomberg TV, Romain Bostic and Scarlett Fu. Our next guest, though, a veteran of Walmart and Levi Strauss. If you were listening to us just now, you heard me introduce him already. He perhaps faces his toughest challenge yet, reviving the storied brand of JCPenney. The department store chain filed for bankruptcy shortly after the start of the pandemic. That was back in 2020. Then in November of 2021, Mark Rosen became the CEO. Just last month, the company announced a $1 billion reinvestment plan that focuses on digital and in-store experiences. Very pleased to have with us Mark Rosen, CEO at JCPenney, joining us on Zoom from JCPenney headquarters in Plano, Texas. Mark, how are you?
I'm good. Thank you very much for having me today.
Yeah, it's good to have you with us. Hey, give us an update. It's a privately held company, so we don't get any insight into the finances. We know that the company's planning to hire 20,000 employees ahead of the holiday season, but give us some more numbers we can work with.
Yeah, so like you said, we are a private company, but what I can share is we now have sales that are over $8 billion. We have just over 650 stores across the country. And we also operate jcp.com, so we're serving customers everywhere right now. And the business is really, you mentioned that we emerged from bankruptcy, and we emerged with a very, very clean balance sheet in a strong financial position with less than $500 million of debt on the balance sheet. So really financially positioned to drive forward and really reinvigorate this brand and reestablish our relationship and our relevance with our consumers, which is really the core of America.
You might have heard Romain just a little earlier talking about over the weekend visiting a mall, seeing a JCPenney that was no longer operating, and even having the conversation with his family about whether or not the store still exists. How do you change that narrative and let people know that, yes, JCPenney is here, and we've got 650 stores across the country? How do you do it?
Well, that's actually part of, so you mentioned that we just announced an over $1 billion investment back into the business, and that investment is focused on remodeling our stores and reinvesting in the store platform, putting new technology and new point of sale in revitalizing our online shopping experience and really improving the jcp.com shopping experience, and then also our supply chain. But I would say we're a retailer, and so it all really starts out with product. And over the last couple of years, what we've done is reintroduce over 25 of our brands like Stafford that every customer knows and loves, and a lot of customers grew up with, brands like Liz Claiborne, and brands like Cook's in our home area. And so we've reintroduced that product, and now what we're investing in also along with that $1 billion is what we're calling a brand reinvigoration that is centered around really helping our customers make it count. And when we look at our customer, I said our customer is the core of America. It's the school teachers that teach our children. It's the construction workers that build our homes and the buildings we work in. It's medical workers who take care of our families. And that customer is looking for a sense of belonging. They're looking for a place where they can find accessible fashion that they can still get at a great value, because that customer is making trade-offs every day in their life. And so what we're introducing also is a campaign to reinvigorate the brand, centering around how we help our customers make every moment in their lives, whether it's a big moment like their daughter's wedding or whether it's a smaller moment like getting their kids ready for school in the morning, but how do they use the products that we have at JCPenney to make that count, but be able to make it count, but still have money left to put breakfast on the table for the kids.
Hey, Mark, whenever you're talking about middle-income shoppers, and especially with this inflation dynamic, how do you sort of view that as far as how to get shoppers back in when they are trying to figure out where to sort of shift their spending at this point?
Right. Inflation is an issue for our customer. We look right now, we see that our customer is spending over $700 a month more just for rent or mortgage, for groceries, for gas. And that means that every dollar is even more important to them. And it's more important that they make every dollar count. And that's really what we're here for, is to help them do that. And I think the unique thing that we can bring to the table is we can bring great fashion and great product at a really accessible price to our customers. And that's what they need. That's what they're looking for right now in their lives.
When you talk about technology upgrades to some of these stores, kind of build on that. What more specifically are you doing?
Within the stores, it's a lot of it's mobile and it's point of sale or checkout technology. So we'll be within the stores centralizing the checkout, but we'll also be putting in the hands of all of our associates in the stores mobile devices that will help them manage inventory better. It'll help them ship and fulfill online orders. It'll help them check inventory and order online for a customer. Or I talked about centralized checkout. What it really will do is move checkout anywhere so that they can mobile check out a customer anywhere in the store.
Hey, Mark, God, I got so many questions for you. We got 3 minutes left, so we're going to do sort of a, try to do some rapid fire questions. Sales of over $8 billion, where do more sales happen right now? At the 650 stores across the country or at jcpenney.com?
So it's about a 70-30 split, with stores the 70% and with the online business about 30%.
And where are you more bullish?
So both are actually growing, and we're focused on growing both. But I do believe that right now we've done a significant amount of reimagining our online experience and investing in jcp.com, and we think there's significant growth there.
So do you think that is it growing at a faster rate, and like you'll eclipse store sales with jcp.com in a number of years?
The jcp.com business is growing faster than the store business. I don't believe that it's ever going to eclipse. I think you could reach a 40-60 point or something like that. But the reality is what we're seeing is that customers still want to shop in stores. They still want to come in. They want to have that try-on experience. They want to get help from an associate to put together an outfit. And in important areas like we reintroduced beauty, a customer's looking to come in and get help and try product.
When you look at this portfolio, whether it's fashion, apparel, home, beauty, as well as jewelry, where are you seeing spending the strongest, and where do you see people pulling back the most?
It's interesting because if we look across the business, we're really pleased with the growth that we've seen in our home business and in our men's and women's apparel business. And we believe we've gained share in all of those areas because customers are spending there. Our jewelry business is another one that continues to be really strong right now. I think rather than seeing people reduce spending in particular areas, we're actually seeing that within an area, they're being a little bit more selective about what they're choosing. And we are seeing some more growth come from some of our private label brands. For example, in home, we're seeing products like Cooks, which is a private label opening price point, small appliance, think like blenders and toasters and things like that, and cookware. We're seeing customers choose that product in some cases because they realize it's great value and they can save money by going for that product.
So are you going to stay a private company forever, or is there an IPO on the horizon?
So right now, we're really actually focused on just driving sustainable, profitable customer growth within the business. And we're very fortunate that we have an ownership group that is aligned with doing that and focused on the long term. And right now, the focus is building that relationship with customers, driving customers back to the brand, and then we'll see where it goes from there.
Mark Rosen, CEO at JCPenney, joining us on Zoom from JCPenney headquarters in Plano, Texas. Hey, Mark, really appreciate you taking the time. Come visit us next time you're in New York, and you can swing by the Interactive Brokers studio. Well, just met in a headline crossing the Bloomberg terminal. T-Mobile U.S. to buy spectrum from Comcast for $1.2 to $3.6 billion. Closing is expected in the first half of 2028. Final price will be determined in the aggregate and on a per license basis. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:21 on Wall Street. We do check markets all day long here at Bloomberg. A Tuesday tech tumble today. NASDAQ was down 144 points, down by 1%. The NASDAQ 100 index down 1.1%. S&P fell 25 points, a decline of 0.6%, while the Dow Jones Industrial Average was down 17 points, a drop of less than 0.1%. 10-year yield 4.27%, with a 2-year now yielding 5.02%. Spot gold down $4 the ounce to $19.12, and West Texas Intermediate crude up 1.8%, $88.90 for a barrel of WTI. A rout in tech companies dragged down the stock market, with investors gearing up for that key inflation report tomorrow morning that is expected to bring more insights into the outlook for the Fed's next steps. Apple, which unveiled the iPhone 15 today along with other products, dropped almost 2%. Its launches are famous as sell the news events, and Oracle plunged the most since 2002 after a slowdown in cloud sales. Oracle shares today, they were down by 13.5%. And repeating an earlier headline from Bloomberg News, T-Mobile U.S. is going to buy spectrum from Comcast for $1.2 to $3.3 billion. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Bloomberg Business Week is brought to you by Glenn Mead. Glenn Mead offers sophisticated wealth and investment management solutions combined with the personalized service you deserve. Your wealth, your mission, your investments. Let's talk. Visit glennmead.com to learn more.
Well, Tim, Amazon is making its next big bet, restocking shelves at physical stores. The company announced on Tuesday an expansion of its logistics network that will let 2 million merchant partners deliver inventory directly to physical retail stores and warehouses instead of only directly to consumer doorsteps. So this does mark its latest push to expand its logistics network beyond serving online shoppers, but it also comes after growing scrutiny of its relationship with sellers. So there's a lot to dig into. Joining us now is Spencer Soper, technology and e-commerce reporter at Bloomberg News, joining us on Zoom from Seattle. Spencer, walk us through this latest developments and why Amazon is doing this, what the motivation is behind this.
Yeah, so I think Amazon's really responding to a desire, well, two factors. Amazon kind of went through a big overbuild during the pandemic, and so has excess capacity it needs to use. And then it's responding on the merchant side and brand side, a desire to have more flexibility with their inventory. So if Amazon wants to compel merchants and brands to use Amazon to ship its inventory earlier and earlier in the process, even as early as when it comes out of the factory in China, it has to give them flexibility on where that inventory ultimately goes. Because if merchants lock too much inventory in with Amazon, then they might be concerned that they're running short for other sales channels, including physical stores. So that's why this was a pretty big deal that Amazon say it'll bring inventory to the store shelf.
Okay, Spencer, take a step back here though for people who just go on Amazon, find a product and they buy it. They don't look at where it's coming from. Explain the merchant network and how it's different from Amazon actually fulfilling orders itself.
Yeah, so a very popular service that Amazon's had for years now is called Fulfillment by Amazon. That's where you buy a product on Amazon. Amazon doesn't own the inventory. You're buying it from some independent merchant. There's 2 million independent merchants on Amazon's marketplace. They make up 60% of the products sold on Amazon. So more likely than not, you're buying from one of these independent merchants. And then a lot of them use this Fulfillment by Amazon service where basically they ship their inventory directly into Amazon warehouses where it's stored, and then once an order comes in, it's packed and delivered to the company's doorstep. And so this latest announcement is earlier in the process, Amazon's saying, hey, look, we'll take your inventory. Not only will we take it to our own facilities where it's processed for our own customers, we will, bring this to any channel of your choosing to fulfill these orders, in any way, including a store sale. And that was the biggest new thing here, was that Amazon would bring inventory to stores.
Why has there been so much scrutiny of Amazon's relationship with the sellers?
Well, on the antitrust front, one of the things that they've been looking at is something called tying, and that's where a company uses its dominance in one industry. In Amazon's case, it would be online sales. It gets one of every $3 spent online in the U.S. goes to Amazon. So if they use that dominance in online retail and then use that to basically to give an advantage to an industry where they're not so dominant, in this case logistics. And so it's a question of, can Amazon kind of tweak things by rewarding you as a merchant on Amazon if you're using its logistics service and penalizing you if you're not. And so that's where antitrust regulators are looking at, is that a no-no? Is that against the law? So, basically compelling or enticing or, coercing merchants to use its logistics service, even if maybe they don't want to, but they can't afford not to, if it's going to sacrifice Amazon sales.
What are competitors doing, and what are competitors like Flexport doing? Which, by the way, over the last few days has had some really bizarre sort of Amazon kind of news tied into it, with the CEO, Dave Clark leaving and old CEO and founder coming back in.
Yeah, they're offering a similar service. They launched it. They had an announcement today, and basically the whole notion is this notion of like an end-to-end solution. Do you want to have one company that that handles like your ocean freight? Do you want another company that handles your customs clearance? There's all these little things that have to be handled along the way of supply chain. And what Amazon is saying is, hey, look, we'll offer you end to end from the minute it comes out of the factory in China all the way to the customer's doorstep. We can handle all of it. But this latest announcement is we can handle little pieces of that a la carte as well, if you prefer, to give you more flexibility with that inventory. So yeah, other companies are after this, and other companies are simply focusing on one particular part of that channel. I think this generally will appeal to smaller sellers and smaller merchants where they don't have the scale to have their own logistics teams, and it can just be kind of overwhelming to deal with this fragmented market of different service providers where a one-stop solution sounds pretty nice.
While this is supposed to broaden when you're looking at Amazon services for those sellers, will sellers become even more dependent on a company that already is getting potentially more than half of their revenue in some instances?
Yeah, that's a great question. And that's definitely the concern. And on this one, I do wonder, though, because if everything's going great for Amazon, they have no incentive to do this. They've got so much business that their entire logistics network is brimming with their own sales, and they've got to just basically service themselves. The fact that they're offering the service, gives a sign that Amazon's kind of topping out in the U.S. Its Prime membership is kind of topped out, and that it's got to look for new sources of revenue. And so it wants to try to get a piece of the pie off of Amazon, because maybe Amazon's kind of Amazon.com itself is hitting the ceiling.
Hey, Spencer, I want to pivot to another Amazon story, this one you worked on with our labor reporter, Josh Idelson, about the U.S. Labor Board prosecutors accusing Amazon of imposing illegal secrecy rules on its staff that could ultimately force the company to change its confidentiality regulations. This has to do with its drone staff. What's going on here?
Yeah, this is really interesting. The particular case here is one Amazon employee who worked in the drone program, which is obviously they've done promotions about it here and there, but by and large it's a pretty secretive program. They don't want other competitors to know what they're doing, because a lot of other companies are working on drone delivery as well. And so what this former Amazon employee said is, listen, I was forced to sign this confidentiality agreement as a term of my employment, and that really puts me in a box in terms of job hunting and just sharing what I do, information about what I do. It's overly broad, and so the National Labor Relations Board saw merit in that. Beyond Amazon, this is just something that lawmakers are interested in. Are tech companies in particular putting these overly broad confidentiality clauses around their employees that kind of step into their rights to speak about things like working conditions and pay and that sort of thing. If these agreements are overly broad and vague, most employers are just going to be cautious and not say anything, which intrudes on their rights that they have rights to talk about things like working conditions and wages and that sort of thing. So we're kind of seeing like a standoff between the stuff Amazon wants to keep secret and what the federal government is saying people have a right to talk about.
So what's the likelihood that this could force Amazon to change its confidentiality rules?
That's a great question. I don't know. I mean, Amazon seems to run pretty much roughshod over the National Labor Relations Board. They don't have a whole lot of teeth when it comes to imposing penalties and that sort of thing. So, a lot of times this thing will drag out for months, and then Amazon will have to like put a little note on the Coke machine in their offices, like, oh, hey, you can talk about your wages and working conditions. So whether it actually has any material impact to their operations, I don't know. That might take more legislation or something like that.
We should note that Amazon denied wrongdoing, saying, quote, confidentiality agreements are common across most companies. In this instance, the NLRB is taking one line of our agreement out of context, and we look forward to showing that through the legal process. Hey, Spencer, we love it when you join us, and congratulations on 2 stories today. By the way, one of them was published at 4 a.m. your time, so I hope
Does he sleep?
Yeah, I hope you got a little bit of sleep. Spencer Soper is technology and e-commerce reporter at Bloomberg News, joining us on Zoom from Seattle. Hey, we got some IPO news, Jess Menton. Birkenstock. I said it earlier. I'm waiting for Birkenstock to file for an IPO. Footwear maker Birkenstock has filed for an IPO.
There you go. You're waiting for it, and you called it there, Tim.
Well, we knew it was coming. Let's get a check on the latest world and national news. Nancy Lyons in the Bloomberg 99.1 newsroom in Washington, D.C. Hey, Nance.
Thanks, Tim. House Speaker Kevin McCarthy is calling for an impeachment inquiry into President Biden. He says it's the next logical step in their investigation into the president and his son's business dealings.
House Republicans have uncovered serious and credible allegations into President Biden's conduct. Taken together, these allegations paint a picture of a culture of corruption.
McCarthy is launching the impeachment probe without taking a House vote, which is a reversal of his previous statements. Conservatives who wanted the inquiry may have moved to oust McCarthy as Speaker if they were denied. Congressman Matt Gaetz is still looking to remove McCarthy, as he explained today on the House floor.
Mr. Speaker, you are out of compliance with the agreement that allowed you to assume this role. The path forward for the House of Representatives is to either bring you into immediate total compliance or remove you pursuant to a motion to vacate the chair.
Congressman Gaetz is especially upset McCarthy has failed to subpoena Hunter Biden. The Senate Judiciary Committee held a hearing today on the efforts in many towns and cities to ban books from schools.
Illinois Secretary of State Alex Giannoulias said his legislature dealt with the issue.
Authoritarian regimes ban books. Illinois libraries will not be eligible for state-funded grants if they ban books.
Ranking Republican Lindsey Graham said this was not the business of Congress.
Am I supposed to take over every school board in the country and veto their decisions about what books go into public schools? And to all the parents out there who believe there's a bunch of stuff in our schools being pushed on your children that go over the line, you're absolutely right.
All endorse the right of parents to superintend their children's reading matter. In Washington, Irv Chapman, Bloomberg Radio.
Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg. Just getting word that footwear maker Birkenstock is filing for an IPO. The book runners include Goldman Sachs, JP Morgan Chase, and Morgan Stanley. But again, making it official, Birkenstock is filing for an IPO. T-Mobile buying spectrum from Comcast for between $1.2 billion to $3.3 billion. A down day on Wall Street today. Tech moved lower. We had NASDAQ slumping by just about 1.1%. S&P 500 index down 25, a decline of 0.6%. Dow Industrials down 17 points today, a drop there of just about 0.1%. 10-year yield 4.27% with a 2-year 5.01%. Spot gold down $9.50 the ounce to $19.13. That was a drop of 0.5%. West Texas Intermediate crude up 1.7%, 88.80 for a barrel of WTI. So a down day today for the Dow, the S&P, and the NASDAQ Composite Index. Well, as for the interest rate backdrop and U.S. markets, Catherine Krantz is CEO at the Center for Macro Specialist Designation, and she was a guest today right here on Bloomberg Business Week.
We are just now coming up to the 18-month anniversary of the first Fed rate hike of this cycle, and it has been the steepest, quickest tightening cycle since basically Paul Volcker's days at the Fed. So add into that the already tightening of lending standards you've had due to the banking crisis, and there's a whole lot of tightening in the pipeline that we don't think has been priced in yet.
And you can hear more of that conversation on the Bloomberg Business Week podcast. You can download it wherever you get your podcasts. Oracle shares plunged today by 13.5%. That is the most since 2002 after a slowdown in cloud sales. Recapping a move lower today, tech in specific, NASDAQ down 1.1%, S&P today down 0.6%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you, Charlie. We appreciate it. Jess Minton and Tim Stenovic here in the Bloomberg Interactive Brokers Studio. Now, U.S.-China trade tensions are rewiring global trade as America seeks to reduce supply chain reliance on geopolitical rivals and source imports closer to home. Now, billions of dollars are pouring into America's southern border, Mexico, but will it seize or squander this opportunity? Mexico does have a history of missing what could have been its big moments. Today's Big Take examines whether the obstacles could cut its boom short. Joining us now is Maya Averbach, Mexico economy and government reporter at Bloomberg News on Zoom from Mexico City. Maya's story is in today's Big Take podcast. You can find it at Bloomberg.com or wherever you get your podcasts. And don't miss the Big Take on Bloomberg Radio, weeknights at 11 p.m. Wall Street time. Maya, it's great having you with us. Walk us through the developments here and how Mexico is beginning to potentially seize an opportunity in the midst of what we're seeing between these tensions with U.S. and China.
Mexico has for many decades been a big manufacturing country. However, it's now seeing a lot more interest from companies around the world who say, I should put at least a portion of my production lines in North America to be close to U.S. consumers, who are obviously the biggest consumer base in the world. And those companies don't want to have the kinds of shipping problems they had in the pandemic, and they don't want to face the cost issues associated with the U.S.-China trade war. And so some of them have turned to Mexico because of its proximity to the U.S., the availability of labor, and its long history of already manufacturing all kinds of products, from autos to plastics to electronic goods. And some of those companies are just deciding to ramp up the production they already have in place.
You write that there are plenty of obstacles, old and new, that could cut the current boom short, though. Talk to us about AMLO, the president, Andres Manuel Lopez Obrador, and his history when it comes to business interests.
I think the president has in some ways been trying to play a double game. On the one hand, in the energy sector in particular, he's gone up against private business that he sees as sort of encroaching in Mexican territory or taking too much control away from state companies. And on the other hand, he's said to a lot of companies and to states, there should be more investment in southern parts of the country. His government is working on a rail and land corridor through southern states that they hope will one day rival the Panama Canal, which might be very far off. But part of his argument is that the country has had an unbalanced development, that too much of investment has gone to northern states. And he wants to attract companies, whether it's automakers, whether it's chip makers, whether it's beer companies further south.
Not since the signing of NAFTA in the 1990s has Mexico held the kind of allure for investors that it does have right now. When you're thinking about sort of the trade dynamics between the United States as well as when it comes to Mexico and Canada, how does you view those types of effects? And depending on when we looked back and with NAFTA, different type of trade agreements there that are happening.
Well, I think we obviously see a huge boom in exports from Mexico to the U.S., especially after the signing of NAFTA in the 90s. We see since the 60s these factories popping up along the border called maquilas, and a kind of cheap labor industry in those border states. In part because of the proximity to the U.S., there are all kinds of trucks that spend all day driving to the U.S. border and obviously driving in the other direction as well, bringing goods from the U.S. to Mexico. In some ways, this has been good for certain parts of the Mexican population. It means that there's a lot of employment. It means that there's been a growth of certain industries and specialization of workers in those industries. There's a long history, for example, of car production or electronics. And so there are people who are trained to work in those businesses now who are finding themselves with more work opportunities. On the other hand, in some ways, it hasn't been so advantageous for Mexico. The country has had about 2% growth since NAFTA went into effect, annual growth. And that's not great, right, for a country that expected to have this huge bonanza thanks to its trade agreement.
Maya, why is that? Why hasn't growth been higher?
I think there's some economists who say in part that the model became importing a ton to export a ton, so that the value added of goods in Mexico wasn't that great. Another part is, what's the role of domestic business, right? Is it just foreign companies putting money in and foreign companies taking money out, or do domestic companies have a role in that chain? And they do have a role, but there has been issues around allowing them to grow, whether it's that they have high interest rates or whether that smaller companies face security issues like extortion, or whether there's just a really high level of informality that it's hard for them to get out of in order for there to be much higher levels of growth. And so there are those who are saying, well, yeah, nearshoring is a great opportunity for Mexico, but the export model has in some ways failed the broader population. Can the country turn things around, or can the country and its trade partners turn things around?
Which companies are among the most prominent that have investments in Mexico?
Well, I think the really big star in some ways has been Tesla. It decided to build a very big factory that's not in place yet, but that it's going to build in the state of Nuevo León. It has another huge factory in Texas. And so in some ways, these two factories have been like twin magnets that are pulling other suppliers to the state. The state economy minister told us that more than 30 companies had moved to the area because of the draw of those two companies, those two factories. But we also see automakers that have long been in Mexico, like General Motors, like Kia, interested in moving into the EV industry and announcing really big amounts of money that they're going to put into either re-outfitting existing plants or building new plants so that they can get in on the EV boom. Aside from that, there's all kinds of smaller companies that we don't hear about, right, that are part of the chain. They're those plastics providers or the electronic components providers, the makers of things like seatbelts that are all going to be part of this.
Maya, we're going to have to leave it there. Thanks so much for joining us. That's Maya Averbach, Mexico economy and government reporter at Bloomberg News, joining us from Mexico City.
It's today's Big Take. Check it out at Bloomberg.com/thebigtake. Also check out the Big Take podcast wherever you get your podcasts.
Your company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pellet. We got more details on the Birkenstock IPO. It is another sign of the allure that American equity markets hold for European firms seeking a valuation uplift. The German footwear maker plans to list its shares on the New York Stock Exchange under the symbol BIRK. The company will disclose the proposed terms of the share sale in a later filing. Bloomberg News previously reported that the IPO could value Birkenstock at more than $8 billion. Amazon is offering a new service that will let its 2 million merchant partners deliver inventory directly to physical retail stores and warehouses. And with more on that story, here's Bloomberg's Steve Rappaport.
Charlie, it's the latest push by the e-commerce giant to expand its logistics network beyond serving online shoppers. It's currently in a pilot test, but Amazon said it will be more broadly available later this year. The latest capability for merchants shows that the e-commerce giant is trying to control more inventory deeper in the supply chain before it's sold. Merchants can use the service called multi-channel distribution to send inventory to warehouses run by other logistics providers, other online marketplaces, and even to physical stores to be put on shelves. Charlie?
And that's Steve Rappaport reporting. UBS planning to move some Credit Suisse staff out of the latter firm's offices in London's Canary Wharf, all a part of plans by the Swiss banking giant to integrate its former rival. And those are some of the top company stories that we're following for you at this hour. I'm Charlie Pellet, and this is Bloomberg.
This is Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
Jess Minton and Tim Stenivek here in the Bloomberg Interactive Broker Studio. We'll have more coming up, but first, let's get a check on the latest world and national news from Nancy Lyons in Washington, D.C.
Thanks, Jess. The first antitrust trial pitting the federal government against a major tech company got underway today in Washington. Bloomberg's Nathan Hager with the update.
The case is United States versus Google. The Justice Department is accusing Alphabet's search giant of paying more than $10 billion a year to maintain its position as the default search engine on the web and mobile devices. Federal prosecutors say Google has been a monopoly for more than a decade and controls more than 89% of the online search market. Google denies the government's claims. U.S. District Judge Amit Mehta is expected to issue a decision next year. In Washington, I'm Nathan Hager, Bloomberg Radio.
Hurricane Lee is still at hurricane strength out in the Atlantic, and Bloomberg meteorologist Rob Carolyn is following its path.
Looks like the core of the system will be passing west of Bermuda a little bit later this week, but the big question is whether or not over the weekend it's going to affect portions of northern New England or more likely eastern portions of Atlantic Canada as we head through Saturday and Sunday as a storm transitioning from a tropical weather system into an extratropical low.
Again, Bloomberg meteorologist Rob Carolyn. While the storm may not make landfall along the upper eastern seaboard, forecasters say rip currents are expected all up and down the coastline. Aaron Rodgers is out for the season after tearing his Achilles tendon in last night's Jets game against the Buffalo Bills. ESPN is reporting an MRI today confirmed that diagnosis. Rodgers was traded to the Jets back in April after spending 18 years with the Green Bay Packers. The Jets had hoped he would finally bring the franchise another Super Bowl win. Fans are not happy.
Every single year, there's always something. It's the Jets. It's the way the Jets work.
Amazing game, but I'm devastated.
Unbelievable. Only the New York Jets.
Rodgers' $112.5 million contract includes $75 million guaranteed for 2023 and 2024. That's according to ESPN. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. Now back to you, Jess and Tim.
Thank you so much for that update, Nancy Lyons. Really do appreciate it. We've got a slew of great stories here on the Bloomberg Terminal. Hard to choose which one to talk about right now, but I want to do this one for Carol because Carol always talks about how the checkout systems at the fast fashion retailers like H&M, Zara, and more are pretty cool. The way that you can just throw all the clothes into this basket and then they charge you whatever you owe. Turns out the security system, though, at Zara needs to be redesigned because shoplifters are one step ahead of Inditex. That's the parent company of Zara.
Yeah, and it's racing to iron out some of these bugs that are there, and a new anti-shoplifting system for its Zara stores, so slightly delaying its rollout, partly because the security tags were easy to identify and remove in initial tests. And that's based on people according to familiar with the matter here on a Bloomberg News story. So the CEO did unveil the new technology in March and pledged to roll it out for tests in all of Zara's stores worldwide over the summer. But really when you're thinking about this, Tim, the problems come as retailers have been trying to boost their defenses against an increase in shoplifting.
Yeah, so, okay. Let's talk about some of the challenges here, Jess. Staff in several countries have raised concerns to management that the tech may actually make theft easier. That's the opposite.
Right,
what they want to do. So it relies on those RFID chips, as you mentioned, and doing away with those hard plastic tags on garments. The problem, though, comes as the British Retail Consortium found that incidents of store theft increased by 27% last year across the UK's 10 largest cities amid the surge in inflation. Primark is adding security guards and cameras to counter the phenomenon, the discount retailer said on Tuesday. Here closer to home in the U.S., you've got malls hiring private security, these flash mob thefts that are organized in some areas, including California, where the rules around shoplifting make it so that these shoplifters actually can't be prosecuted with felonies up to a certain amount. You see that on social media. It's something that these companies are talking about, shrinkage.
Dick's Sporting Goods was
Yes.
amongst the big ones this past earnings season talking about that, Tim.
All right, you're listening to Bloomberg Business Week, and this is Bloomberg Radio.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
It is Bloomberg Business Week. We continue. We're live from the Bloomberg Interactive Brokers studio. We're streaming on YouTube and on Bloomberg Originals. I'm Tim Stenevec, along with Bloomberg News Deputy Team Leader for U.S. Equities, Jess Menton. Jess, we've got a great hour coming up.
You can't miss it. So coming up soon, we'll have the brand new book from our colleague Zeke Fox, Number Go Up, Inside Crypto's Wild Rise and the Staggering Fall, Tim.
We're also going to go inside and outside the mysterious $2.3 billion sphere that's lighting up Las Vegas. It's in the upcoming issue of Bloomberg Business Week magazine. You can read that story, though, on the Bloomberg terminal right now. First up, a check on the day's trade and top business stories. Here's Charlie Bell.
Hi, thank you very much, Tim. Here's what's going on. Turned out to be a down Tuesday here. The Dow, the S&P, NASDAQ all declining, finishing today's session in the red. Right to the numbers here with the S&P down 25, now at 44.61, a decline of 0.6%. NASDAQ today, tough day for a lot of big tech names. We had NASDAQ down 140